Here are 8 news stories from the world of the crypto industry, ****. First, news. BTC prices remain stable. Bitcoin's price has remained relatively unchanged despite the release of economic data from the US. The flagship digital coin rose by 0.4% in an hour, reaching $65,680. The virtual currency has gained 2% over the past day. Today, it was revealed that personal income in the United States increased by $50.5 billion in August 2024, or 0.2% for the month. After taxes, disposable income rose by $34.2 billion, and consumer spending increased by $47.2 billion. According to experts, the main factor behind the rise in income was an increase in wages, while income from assets decreased. The Personal Consumption Expenditures (PCE) price index rose by 0.1%. Meanwhile, goods prices dropped by 0.2%, while the cost of services increased by 0.2%. Significant expenses were related to housing, financial, and insurance services, while spending on new vehicles declined. A 0.8% drop in energy prices also impacted inflation. Real disposable income increased by 0.1%, indicating that the purchasing power of the population remains steady. However, the increase in spending on goods was minimal, while services continued to rise due to the growing popularity of categories such as entertainment services. Despite the growth in expenses, personal savings totaled $1.05 trillion, equivalent to 4.8% of disposable income. This figure remains relatively stable in the face of high consumption levels and inflationary pressures. The annual growth of the PCE index was 2.2%, accounting for the drop in energy prices and slight growth in food prices. It's important to note that excluding the energy sector and food, prices increased by 2.7% year over year, indicating continued inflationary pressure in the services sector. Second, news. Bitcoin FOMO returns. According to a new research report, the impressive growth following the U.S. Federal Reserve's interest rate cut in mid-September has pulled Bitcoin out of a downtrend, and now crypto is targeting $70,000, followed by new all-time highs. Are you holding enough Bitcoin and altcoins to ride the next wave? Reads the subheading of the latest analysis by Marcus Thielen from 10x Research. Once Bitcoin surpasses $65,000, we expect a rapid move towards $70,000, followed by new historical highs in the near future. Thielen noted a sharp rise in stablecoin issuance after the Federal Reserve's July meeting, where interest rates remained unchanged, but the possibility of easing in September was hinted at. According to Thielen, nearly $10 billion in stablecoins were issued in the following weeks, flooding the crypto markets with liquidity and far surpassing inflows into spot ETFs. Thielen highlighted that USDC Circle accounted for 40% of recent stablecoin inflows, significantly higher than the typical share compared to USDT Tether. This is important, he said, because while USDT minting on Tron is usually associated with capital preservation, USDC minting could indicate rising DeFi activity. Thielen also noted that 55% of currently mined Bitcoin comes from Chinese mining pools, and China's large-scale monetary and fiscal stimulus measures, announced immediately after the Fed's rate cut, could trigger significant capital outflows from China into cryptocurrencies. The likelihood of a rally in the fourth quarter is exceptionally high, and the growth is likely in its early stages, Thielen concluded. A major surge could be on the horizon, causing even more FOMO in the crypto space. Currently, Bitcoin is up 2.3% in the past 24 hours and nearly 12% month over month, reaching $66,300, its highest level since late July. Third, news. Mine Network raises $10 million. The developers of the innovative Mine Network project, which offers a solution based on fully homomorphic encryption (FHE) for AI and proof-of-stake networks, have announced raising $10 million in a pre-series of funding round. The leader of this round was venture capital firm Hack VC, along with other major investors such as Animoca Brands, Swissborg, Master Ventures, Arcstream Capital, Cogitant Ventures, and Moonhill Capital. This stage highlights the growing interest of large funds and projects related to advanced technologies that integrate artificial intelligence and cryptocurrency networks. Mine Network's FHE-based solution enables secure data computation and staking in networks, making it promising for integration into next-generation blockchain projects. In addition to major venture capital funds, angel investors such as Mr. Block, Kyle Chass, Mike Silligads, and Mario Knopfel also participated in the round, further strengthening confidence in Mine Network as a key player in the crypto and AI solutions markets. Rohit Patel, a partner at Hack VC, commented on this round. Mine Network offers an innovative platform capable of revolutionizing how data is interacted with in blockchain ecosystems. We believe this platform has the potential to transform the market and set new standards in the integration of AI and cryptographic technologies. The startup continues to develop its infrastructure and functionality, striving for leadership in the blockchain and AI sectors. The company's focus on FHE technology opens up possibilities for secure data processing without decryption, which is particularly in demand given the growing requirements for privacy and security. The $10 million raised will allow Mine Network to accelerate platform development and enhance its integration with existing AI and blockchain ecosystems, as well as expand its functionality to attract new users and partners. Fourth news. Germany establishes the Federal Bitcoin Association. 64 members of the Bundestag have founded the Federal Bitcoin Association. The group will focus on promoting the first cryptocurrency at both the national and European levels, as well as creating favorable business conditions. The association will offer companies a platform for knowledge exchange, strengthening expertise, community building, and lobbying for Bitcoin as a technology and payment method. Any companies or individuals, without voting rights, can become members of the association. The organization will focus exclusively on digital gold, without addressing other cryptocurrencies and blockchain technologies. The participants have pledged to contribute to the adoption of business-friendly regulations, including tax incentives and support for mining. By focusing on the first cryptocurrency and collaborating with political and business circles, we are creating a stable foundation for the further development of the Bitcoin economy in Germany and Europe, the organization's program document states. It's worth noting that in July, Bundestag member Joanna Coder criticized the authorities for selling Bitcoin. Over the course of a month, the German Federal Criminal Police Office sold 49,858 BTC for €2.6 billion, $2.88 billion. Fifth news. What Ethereum investors can expect in October 2024. Ethereum's ETH price is struggling to stabilize around $3,000 due to weak institutional capital inflows and declining investor confidence. Despite Ethereum's current weakness, October could bring significant changes in the coin's sentiment and price dynamics. However, this will require institutional support. Ethereum might not rise above $3,000. The optimistic forecast for Ethereum largely depends on institutional investors, as weak inflows into spot ETFs on ETH are causing concern. However, this may change next month. In an interview with BN Crypto, Matt Mina, a crypto research strategist at 21.co, discussed the reason for such low interest. The lack of demand for Ethereum from institutions can be explained by the unfortunate timing of the ETH ETF launch. The ETFs faced several unfavorable factors, including a poorly timed summer debut. This is typically a period characterized by low activity in both the crypto and traditional financial markets. This was worsened by their launch 2 weeks before the major unwinding of positions in the Japanese yen. Macroeconomic event brought considerable challenges to risky assets, including cryptocurrencies. However, Ethereum's path to $3,000 will also depend on many external factors. Alvin Cohen, COO of BitGet Wallet, discussed these with BN Crypto. What could push ETH's price to $3,000? First, technical innovations. Projects in AI, payment systems, and risk-taking could be launched on the Ethereum platform, attracting new users and increasing utility. Second, improved macro liquidity. After the Federal Reserve cut rates, we are seeing new dovish signals. If the Fed's rates drop to levels comparable to Ethereum's staking yield, around 3.5%, ETH could once again become an attractive yield-bearing asset, drawing in more capital. On the other hand, bearish signals are starting to appear. Notably, the 30-day market-to-realized value ratio is now in the risk zone at 6.5%. When it is between 3% and 12%, investors tend to lock in profits by selling their assets. This increases the risk of a price correction, especially when market sentiment remains fragile. Such bearish pressure could prevent Ethereum from confidently breaking above $3,000 unless bullish momentum strengthens. The price is currently on the verge of a bullish breakout from a descending channel that has been forming for the past 2 months. A breakout could increase the coin's value by 23% to a target level of $3,258. However, such growth will largely depend on institutional inflows. Even if Ethereum doesn't rise by 23%, sustained investor optimism and favorable macroeconomic conditions could push ETH above the resistance at $2,930 and help it break the $3,000 mark. On the other hand, if the breakout fails, the token risks remaining within the channel. This could lead to a test of its lower boundary at $2,170, canceling the bullish scenario. 6th News. Police arrest the founder of the Zort crypto platform. IZA was detained earlier this week and is scheduled to appear in the California District Court on October 8. According to the prosecution, the suspect posed as an FBI agent. In 2018, IZA allegedly stole a man's laptop and, threatening him with a gun, demanded passwords to access crypto assets. IZA managed the cryptocurrency trading platform Zort, which was marketed as an automated platform for trading digital assets powered by artificial intelligence. The platform offered apps for iOS and Android. According to the FBI, IZA transferred tens of thousands of dollars to personal accounts of local Los Angeles police departments to pursue his adversaries under the guise of law enforcement, conducting arrests and searches, a flagrant violation of the law. The largest payment to an LAPD officer, sent from Zort's business account, was $154,933. IZA is also accused of sending intimidating text messages. He allegedly asked the police to arrest his enemy by staging a drug possession scenario. In September 2021, based on IZA's tip, the police arrested a man for drug possession. His home was searched, but the victim claims he didn't possess any illegal substances. The police commented on the situation, stating that several Los Angeles County sheriffs were suspended following the federal investigation into Adam IZA's case. The founder of Zort is also accused of tax evasion through a network of shell companies and accomplices. According to the FBI, from 2020 to 2022, IZA failed to pay approximately $1.71 million in federal taxes. It is assumed that these funds were spent on luxury cars, renting a mansion, and a cosmetic leg-lengthening surgery. Recently, the FBI arrested 20-year-old Singaporean Malone Lam from Los Angeles for orchestrating a criminal scheme to steal cryptocurrency from local residents and laundering over $230 million in Bitcoin. 7th News. Crypto market capitalization surges by $75 billion in 5 days. This week, the total cryptocurrency market capitalization increased by more than $75 billion. This highlights the growing interest in digital assets, especially Bitcoin. The rise in market value coincided with the active accumulation of the world's leading digital currency by large institutional players, signaling strong confidence in the asset's long-term prospects. The top 5 Bitcoin holders include financial giants such as iShares Bitcoin Trust, MicroStrategy, Grayscale Bitcoin Trust, Fidelity Wise Origin Bitcoin Fund, and Tether Holdings Ltd. Leading the group is iShares Bitcoin Trust with 362,192 BTC, confirming BlackRock's active involvement in the crypto industry. Next is MicroStrategy with 252,220 BTC, continuing its aggressive BTC purchasing strategy under the leadership of its CEO Michael Saylor. Grayscale Bitcoin Trust also holds a significant amount of Bitcoin, with 220,957 BTC. Fidelity, one of the largest investment managers in the world, has accumulated 177,197 BTC through its Wise Origin Bitcoin Fund. Rounding out the top 5 is Tether Holdings Ltd., which owns 75,354 BTC. Analysts note that the presence of such large players strengthens the perception of cryptocurrency as digital gold and a safe haven asset. The growing participation of institutional investors also stabilizes the market, reducing volatility and making it more predictable. At the same time, the concentration of large amounts of BTC among a small group of companies carries certain risks. If sentiment among these institutional investors changes abruptly, significant price fluctuations are possible. Experts believe that further price growth will depend on macroeconomic factors, including central bank monetary policies and cryptocurrency sector regulations. However, in the short term, institutional investor interest could serve as a catalyst for strengthening Bitcoin's price. 8th News: what Bitcoin investors can expect in October. Bitcoin has surpassed the $65,000 mark, inspiring investors to anticipate an upcoming rally. What could hinder further growth? The recent surge in Bitcoin has filled investors with optimism that BTC could soon exceed $70,000. The last time the currency reached these levels was nearly 3 months ago. However, long-term holders could pose a potential threat if they decide to sell their assets and lock in profits. What does Bitcoin need to reach $70,000? It's known that Bitcoin typically rises in the fourth quarter. Nevertheless, BTC's rally depends not only on investor sentiment and behavior. In an interview with BN Crypto, Matt Mina, a crypto research strategist at 21.co, explained other factors that could affect the price's growth to $70,000. One key catalyst is the potential reduction in interest rates by the Federal Reserve. This would likely boost risk appetite in financial markets. Investors will start moving capital from less profitable assets, such as bonds, into riskier ones like stocks and cryptocurrencies in search of higher returns. A rate cut also increases market liquidity, a factor from which Bitcoin traditionally benefits, given its strong correlation with the global monetary aggregate M2. As liquidity rises, we often see a price increase in risky assets, including BTC, Mina said. Mina also noted that the upcoming U.S. elections will play a significant role in determining BTC's trajectory. Moreover, the political landscape is becoming more favorable, as both presidential candidates support the development of the crypto industry in the U.S. This suggests that the regulatory environment will become more crypto-friendly. Such political support could bolster investor confidence and contribute to capital inflows into the market, easing concerns about regulation, Mina added. However, it's important to remember that after reaching $65,000, Bitcoin is nearing a 2-month high. This may prompt long-term holders to consider selling. Historically, they tend to sell when prices are at a peak. Such activity could significantly impact the market. The mobility indicator currently shows an uptick. This metric helps assess the age of coins involved in transactions and analyze the behavior patterns of their owners. Its value rises when market participants spend older coins, putting them into motion. Sales by long-term holders could lead to a price correction. Long-term holders are the backbone of Bitcoin. If they begin to sell in large volumes, it could increase volatility and potentially trigger a pullback. Bitcoin has successfully turned the $65,000 level into support. The next crucial target is to do the same with $70,000, which will be key to continuing the upward trend. BTC has already broken out of a rising symmetrical triangle pattern, which suggests a potential 35% growth, with a target of $81,556. However, a more realistic forecast points to the next goal around $70,000. For Bitcoin to rise above $70,000, it will require strong investor support and favorable macroeconomic conditions. If these factors don't materialize, and long-term holders start selling actively, the currency could struggle even to break through $68,500. In this scenario, BTC risks losing support at $65,000, which would invalidate the bullish outlook and lead to further declines.